Empire Manufacturing Survey. Is this a one-off blip or a sign of more pain to come? Let's talk about something that Jay Parsons put out on X or Twitter about multifamily that is important to understand. Let's talk about what the IMF has to say. And of course, let's talk about housing inventory. But first, I want to call your attention to 3 important videos that went out yesterday on the channel. One, I want to give a special shout out to Lindsay Stamp 3. You can follow her on X or Twitter. Why is Lindsay's interview very important? It is because she started today. She's 30 years old. She was $100,000 in debt. She did not like her job, and she saw a dismal future. In that conversation with Lindsay, we went through how she paid off $100,000 in debt, how she started to acquire assets, and how she looks at getting financial freedom in 10 years. Lindsay, you're amazing. Congratulations for all you've accomplished so far. And of course, I look forward to interviewing you again because you are doing some amazing things. Keep going. Next, TYLG, our Friday expert that does our weekly updates, he shared with us his most impactful person in his career, and it was Tony Robbins. It's really interesting to hear Ty talk about it because he was a gardener, 19-year-old gardener, when he was introduced to Anthony Robbins, obviously became Tony Robbins. I thought that interview was worth watching. And then finally, Bill Allen is taking on teenage tycoons and making it easier to talk about money with your kids. This is something that I failed at miserably, and I wish I had a do-over, as we have talked before. But let's get into the information. Let's start with Jay Parsons. We have heard a lot about multifamily pain. We've heard a lot about multifamily units coming, but a tweet that Jay Parsons put out actually had the top 20 markets in 2023 that had the most units added on a percentage basis. We sometimes get lost in the idea of absolute numbers, which of course means the big cities dominate those. But that doesn't make it a problem. Let's look at the list of the top 5. If you want the full 20, go look up Jay Parsons on X or Twitter. Number 1, actually, you know what? We'll reverse order. We'll start with number 5. Number 5, Myrtle Beach, South Carolina, added just over 3,500 units, but that is almost 8%. This is why it's important to understand the percentage increase, because again, that will be absorption, right? Is the population there and ready? Number 4, Lakeland, Florida. Lakeland, Florida added only 2,400 units, but that made up almost 8.5%. Number 3, we have Port St. Lucie, Florida, adding just under 2,550 units, or 8.9%. Number 2, I would not have guessed this city if you gave me 1,000 guesses. Well, maybe 1,000. Certainly not 100 guesses. Number 2, Sioux Falls, South Dakota. Who knew? Sioux Falls, South Dakota added 2,570 units. That is over 10%. Think about that. One market, Sioux Falls, up 10% in number of units in a year. I'm going to guess that has an impact on rental amounts. Just a guess. And number 1, this is actually a city I talked about years ago. If you put a gun to my head, I would have started over and probably picked this city. Apparently, a lot of builders agreed with me because, again, the units that came available in 2023 were probably started in 2021. And of course, that is Huntsville, Alabama. Huntsville, Alabama added 5,637 units in 2023. That is a whopping 15.6%. So folks, again, when you hear things talking about Phoenix or Austin or wherever, Remember, it's the percentage. It's at the margin where you can see significant differences in demand, in rent, and supply. So really look at it on a percentage basis. Let's go back and talk about what we found from Altos Research. Again, Altos Research puts out weekly data that is important to you and I on this channel. What we are looking at in the early parts of January seems to be the repeat of 2023, which again is what we were calling for. Inventory is up. Inventory is up 1.2%. It is up 6,000 units for a total of 505,000. Just so we can have a scale, in 2015, going back to pre-pandemic, kind of balanced years, they had 931,000. So we're a ways away from quote unquote normal. Pending is up 25%. Or no, sorry, 25,000. My mistake, not 25%, up 25, up to 2,000. This is what happens when you do this live and you got lots of numbers. Strike everything I just said, try again. Pending, 251,000 units are pending. That is up 5% year on year. Yes, I finally got that one right. So again, pendings are up 5%. Inventory is up 1.2%. These are things that we have to watch. And then finally, for those people begging and hoping for a price crash, as we sit today, median price is at $420. That is up 3% year on year. Again, as I shared yesterday, where I will be looking at the numbers going forward is new listings. Do we really have a true unlock of the move-up buyers? I don't see it, but let's wait a couple of weeks and we can decide. Number two, every Wednesday, we get mortgage demand data. What is going on with purchase and refi? And of course, does active inventory continue to build? I think we will have a much better idea at the end of January than we do today. It's still very noisy in this part of January. So again, lots and lots of stuff going on. We are starting to get some additional earnings. We got Morgan Stanley and Goldman Sachs. Just very quick, Goldman Sachs beat top, beat bottom. Morgan Stanley beat top line, which means revenue, missed bottom line, which means earnings. Again, we got to really watch these ones. Really, for me, it's going to be the medium-sized banks, which start reporting Thursday and Friday. I think we have a bunch on Friday, like MT Bank and others. That's where the pain, the stress will be. It won't be in the big five, the big six. It will be at the regional bank. So more on that later in the week. Let's talk about the horrible, dare I say catastrophic, Empire Manufacturing Survey. Now, as I say many times with these economic surveys, the numbers mean nothing to you. You should be looking for trend and gap, right? What was the expectation? What was the results? So here we go. Empire Manufacturing last month, negative 14.5. Again, should mean nothing to you. Negative 14.5. What was the expectation? Negative 5. So the expectation was it was getting better. Aha, but what happened? Negative 43.7. That is like a 10 sigma miss. You expect negative 5, you get negative 43. Not good. Again, it's one number. We need to see if there's follow through, but not good. Not good, not good, not good. More on that in the future. IMF put out a very interesting article that I thought we should talk about. There's always this question. I have it, you have it, others have it, is how much of the rate increase has the economy felt? Right? The Fed has taken us on a 525 basis point move in the shortest time ever. How much of that are we feeling? We always talk about lag effects. Well, according to the IMF, We have now feeling about 75% of that rate increase, which off the top of my head means about, what, 4%? Maybe, yeah, probably about 4%. We still have that last 125 basis points. Here's the deal. In the article, IMF was trying to paint a vision like the US economy is going to be okay, they're almost done. I actually disagree. Like with most things, it's always the extra where you hit a tipping point. If you go back and watch this channel back in June and July of last year, I believed that the Fed should have stopped at 5%. They, of course, went one raise higher than I expected. I admitted my mistake. I wore the shirt, all of that. But I want to remind you that I thought they should have stopped at 5. So what we are going to start to feel for the next 3 or 4 months is the impact of that last 125 basis points. So again, it is not over yet. The other thing that this article talked about is Europe has more to go. They said that Europe started raising after the US, so they're like 50 or 60% through. So a lot more, I don't know, pain coming to the European economy. We have another acquisition. Again, folks, one of the things that I called for 2024 in December was we are going to have the year of acquisitions. We just had Synopsys by Ansys for $35 billion. $35 billion, folks. I believe this is going to be the year of acquisitions for 2 reasons. One, you are going to see cash-heavy and bankable businesses buy growth. They are going to buy growth. And second, you are going to see stressed companies with poor balance sheets, with the inability to raise debt, sell for a discount. So again, I still believe we are on this, and this is why I think Goldman Sachs, Morgan Stanley, and the others will actually have a pretty decent 2024 because the mergers and acquisition market will pick up, but we shall see. Let's talk about the 10-year and 30-year note. We have talked about this a bunch, but let's put a pin in it. Since 1972, so a long time, since 1972, the average spread between the 10-year note and the 30-year mortgage was 170 basis points, aka 1.7%. We saw during the last year or so, it peaked over 300 basis points. So there was 1.3% of margin to get back to normal. Well, today we sit at 270 basis points. So again, when you look at mortgage rates at, let's just say 6.6, we still have the ability to come in roughly a full percentage point or 100 basis points without any movement in the 10-year or Fed rate cuts. I do believe that 2024 will be the slow compression of this because again, all the banks needed to hear was the Fed was done tightening, which I do believe they have been crystal clear about. So again, it will be very interesting. What is Zillow saying about home prices? Well, if you might recall, Zillow seemingly 2 months ago was saying that, you know what, we're pretty negative. We are going to call a flat or 0% increase. Well, they've just changed it again. Now they are saying that 2024 will be a year of 3.5% growth in median home prices. Alrighty, folks, I hope you have an amazing day. 2 announcements. 1, we have 3 general admission tickets left to our Vegas events. We opened up 5 seats, 2 are sold. We've got 3 left. If you want to be in Vegas with us President's Day weekend, I'll put a link below. I put links on past videos. Get those 3 tickets. This might be sold out by the time you see this, but maybe not. Take a shot, go look for it. And of course, the virtual session is still there. We have put up the agenda so you can schedule your time appropriately. We have sold out 60 tickets and we are on the way to selling that out as well. Alrighty, folks, I want you to have an amazing day. It's a lot of fun doing this with you. I wanted to let all 121 of you watching us live to know that I appreciate you. Thank you for being here every day. So many of you show up every day. I just wanted to say thank you, thank you, thank you. Hit the thumbs up, subscribe, all of that good stuff. I appreciate it. And of course, don't forget to check out my other channels, Daily Financial News, and of course, Best of ORaaT. Alrighty, folks, have an amazing day. Later.